Good morning and welcome to Stock Market Today. It's Wednesday, October 30th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today where you can sign up for a free email to get daily stock ideas for you to consider in your inbox every trading day before the market opened. So U.S. equities finished mostly lower in Tuesday's trading after the S&P 500 hit a new all-time high in Monday's session. Treasuries were unchanged to slightly stronger. Dollar was weaker on the yen and euro crosses, but little changed against sterling. Gold finished down 30 basis points, and WTI crude was down about 0.5% ahead of U.S. inventory data. At the sector level, your outperformers were healthcare, materials, energy and industrials, your underperformer, comm services, tech, and consumer discretionary. And all eyes are going to be on the Fed today, where a 25 basis point cut is widely expected. And in front of that, futures are not doing much, relatively unchanged in quiet morning trading. Equities in Asia were mostly weaker overnight. European markets are trading lower this morning. Treasuries are slightly stronger with the curve flattening. Dollar is weaker on the major crosses. Gold up 20 basis points and WTI crude is down 10 basis points. Structure of the S&P 500, call it a little bit of a pause after breaking to new highs, but holding above the breakout level. Key support still in the area of the 200-day moving average near 2880. Then below that, the August lows are really the main area of focus from a trend perspective at 2820. In the near term, right, expect to see some potential volatility in the market today around the Fed. Should we decide to pull back, I think 2950 is the near-term support area that I would look for holding, right? 1, 2, 3 gaps at around that level. So obviously stands to reason that that's an important level to hold above. The RSI holds in bullish ranges above 60. Chaikin money flow still on that bearish reading, but it has been improving over the course of the past couple of days, as we've been talking about. So the indicators are mixed. Markets still holding above the breakout level. We have the Fed today. Obviously, all eyes on their policy statement and the press conference from Jerome Powell after that meeting. But these are the levels that we're watching closely. Now, our market in a minute. What are we writing about today? Well, we got that pause after reaching new highs, right? Obviously, as we said, Fed is in focus. 25 basis point cut is what's widely expected. But what's interesting is if you look out via data from the CME to the December meeting, market is implying rates will stay where they are after today's cut. Sentiment continues to move towards greed as the SPY breaks higher. Small caps continue to lag, but what's interesting is small cap tech is leading. We're going to take a look at that a little bit later in this show. And as I said, futures point to a roughly flat open here today. Let's take a look at the power bars now. The Dow was unchanged yesterday, 9 bears to 3 bulls for the Dow Jones Industrial Average. S&P 500 were virtually unchanged, 107 bulls to 93 bears there. So kind of a ho-hum day, except for the NASDAQ, which underperformed. 23 bulls, 16 bears, as the NASDAQ was down 77 basis points on the day yesterday. Small caps outperformed. 660 to 316 bulls to bears. Slight uptick in the price of bonds, sending yields lower. And as we said, healthcare was the leader at the sector level, up 1.4% on the day yesterday. Some strength in the hospitals driving trading there. 28 bulls to 7 bears in the healthcare space. Now, I've been looking at the healthcare group on a relative basis, and it's kind of neutral at best, but obviously we want to be paying attention with this ratio at greater than 4-to-1. Quarter of the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Taking a look at our stock of the day now. American Home for Rent, AMH, ticker symbol there, has a very bullish Chaikin Power Gauge rating, closed at 2636, flat yesterday. Very bullish rating due to strong price volume activity, attractive financial metrics, strong earnings performance, and positive expert activity. Now, this is a REIT, right? Part of the Real Estate Investment Trust, does have a bullish rating, 20 factors. Give us that very bullish rating, strong trend, strong industry group. You can see the steady uptrend here above the rising long-term trend line. But what I'm keying on is the diminishing relative strength, right? We've been talking for a while about rates. And if rates truly are backing up, which they appear to be in the near term, how that's likely to weigh on the relative performance of the bond proxies in the equity market. The bond proxies are utilities and the REITs. So just something to keep in mind. This is a good looking stock, but just the potential headwind could be there if rates do continue to move higher. So what I would say is we have a very bullish stock that's still outperforming the market with bullish money flow, neither overbought nor oversold. Prefer it down here in an oversold condition. I think it's the type of name that you want to consider owning, but just, there's always your risks out there, which is why we always advocate for managing risk and knowing where you're going to get out before you get in, right? You have a process for getting into the stock, but one of the things that people don't really talk about a lot is, what is your process for getting out? How do you manage risk? There's always a price that says you're wrong. Figure out what works best for you. For me, I think I'd be looking at this $25 level, right? If I was long this stock, $25 appears to be a key level. So take a look at AMH as a potential long idea, but just be mindful of the shifting dynamics under the surface. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. Tech's still at the top of the list, and we do like to see that. 20% plus of the S&P 500. We want tech to be a market leader. The cyclical rotation continues to play out. You can see it here in the materials, of 3% over the past 5 days. Healthcare, on the back of that strong day yesterday, is in the top 3 slot over the past 5 days. Financials continue to do well as rates back up, and financials are now beginning to outperform the market, but just be mindful of, we've been talking about, the rotation under the surface there. Money appears to be rotating into banks and out of insurance. Industrials, energy, comms, middle of the road, staples, discretionary use, and real estate. And there's what I was talking about earlier, right? With rates moving higher, REITs and utilities, our bond proxies are beginning to underperform here in the near term. Discretionary, obviously a diverse group, a lot of moving parts there. I think it makes sense, if you're looking at discretionary, to drill down to the industry level, where you'll see that retail is actually coming on pretty strong of late. Our industry in focus today, transport services, which over the past 6 months has been, call it an inline to slight underperformer, underperforming the S&P 500 by 90 basis points. However, we have a strong power bar ratio, 9 bulls to 7 bears, earns it a spot of number 11 of the 21 subsectors that we track. Now, it has moved down 4 slots over the past week, but there's an interesting dynamic going on here. Potential personality change, as we like to call it in the transport. Some of the indicative stocks there that you may want to consider on the long side of the portfolio when they set up: JetBlue, JBLU, has a very bullish rating. United, UAL, has a very bullish rating, and SAIA has a bullish rating within the transportation services industry. And if we look at the ETF here, take a look at transport services. XTN, ticker symbol for the fund. It has a bullish ETF power gauge rating, and this is a strong trend above a rising long-term trend line. Now, this has been choppy for the better part of 12 months. There's no denying that, right? We've kind of really gone nowhere and starting to trade towards the top end of that range. But what's interesting to me, and what I'm keying on, is the relative strength versus the SPY. Look at this relative strength versus the SPY here. Throughout the course of the past 12 months, it's predominantly been an underperformer. And when it has tried to outperform, hasn't had a lot of momentum behind it, right? Didn't really get going as it was beginning to outperform. But now look at this. Look at the outperformance now, right? The intensity of outperformance currently relative to the past 12 months when it's tried to outperform is much greater now than it was in those past instances. At the same time, the outperformance is coming with a bullish ETF power gauge rating. Now, the fund is overbought, but money flow is bullish. So I think it makes sense to start to pay attention to the transports, right? Kind of the same analysis that we were going through with the banks a week and a half, 2 weeks ago, where we were starting to see the outperformance, and then it started to make sense, and we were seeing if it could build, right? I think the same process needs to apply here for the transports. Start to drill down on some interesting names when those names become oversold. But I think it makes sense to start paying attention to the transports here. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. National Oil Well, Varco, one of the beaten down energy stocks. Well, it popped yesterday following their earnings announcement, up over 13%, and it caught an upgrade here today. Leggett & Platt, LEG, up 11.7% following their earnings announcement, and That stock caught a downgrade today. Xerox, actually the exact same story, up 11.72% following an earnings announcement, but the stock did catch a downgrade here this morning, so we'll see how that trades. Leidos, part of that strong aerospace and defense group that we'd been focused on. LDOS has a very bullish power gauge rating, and the stock popped nearly 7% following their earnings announcement yesterday. And then HCA, I said healthcare was led by strength in the hospitals. Here's HCA, up 6.4%, very bullish rating there following their earnings announcement. The loser side of the board, IPG Photonics. They missed EPS and revenue, and that was not well received by investors, down 13.5%. A.O. Smith, EPS was relatively in line, but the stock down 4% on the day due to their guidance. FTI, didn't see a ton of news there to send that stock lower by over 3%. KR Kroger, some cautious commentary ahead of their analyst day next week from sell-side analysts. Sent that stock lower 2.75%, and VF Corp continues to follow through to the downside following their disappointing earnings announcement a couple of days ago. So let's dive in now. Sentiment. On Thursdays, we look at sentiment. And sentiment, what I would say about sentiment here is that it is no longer the tailwind that it was a couple of weeks ago. Remember when we were talking about, S&P 500 holding above support and sentiment getting close to bearish extremes. This is the 13-day moving average of the CBOE equity put call ratio. And we said that that could likely provide a tailwind that would lead the S&P 500 up and out of the consolidation. Well, that played out. But as that's played out, sentiment has become less fearful. You can see the moving average of the put call ratio moving more towards the middle of the range here. Not yet at a bullish extreme that would warrant caution, but just less bearish than it had been in the past, right? And that's what I mean when I say no longer the tailwind that it was. At the same time, check out the VIX. While the S&P 500 was holding support, right, the VIX was trading around 20. Now it's down around 13. So around 20, sentiment tailwind. Down here around 13, much less so. So sentiment moves towards greed and becomes less of a contrarian tailwind than it was, a few weeks to a month ago as the market was testing support before bounding higher. So we're going to continue to keep an eye on that, especially in light of what we're going to get today, the Fed announcement today. Sentiment less of a tailwind than it had been. Now, we've been talking a while about small caps, right? And how they've been laggards, how if you've been invested or overweight small caps, you're likely underperforming the market, right? Here's the IWM now testing resistance. Fund is trading above the rising 200-day moving average, but for all intents and purposes, again, we've really gone nowhere over the course of the past year on an absolute basis. And since the February-March timeframe, been a big underperformer, right? Underperforming the S&P 500, IWM relative to the SPY. And that trend does remain in place. Still a downtrend, testing the downtrend line as the fund tests resistance. What's interesting to me is that these last few trips lower, the RSI for the IWM has not been able to become oversold and is now moving higher, trying to shift into bullish ranges. I would love to see IWM break out because that would be a breath confirmation to the strength that we're seeing in the broader market, right? So far has not been the case. I'm going to watch this relative strength line closely. Would love to see small caps join the breakout party along with the SPYs and the Qs. But what's interesting to me and why we always take our analysis a step further is that there are areas of small cap that are breaking out. Now, in particular, small cap tech, right? The Invesco S&P Small Cap Info Tech ETF, PSCT, breaking topside with the broader market. So while small caps haven't broke out, small cap tech is breaking out. And it's also breaking out on a relative basis here against the SPY. Remember, we looked at tech breaking out yesterday, broad tech, large cap tech, but check out small cap tech breaking out as well on an absolute basis, on a relative basis, with momentum shifting to bullish ranges. And if we take a look, this fund has a very bullish Chaikin ETF rating, 40 bulls to 4 bears in the fund. So areas of small cap are beginning to wake up. I think you can start to focus there. That's going to wrap it up for today. Head over to the site for the email. I will see you all back here tomorrow. Have a great day.